Hello and welcome. My name is Ray Abercromby. I'm a corporate tax partner with Azets, and it's my pleasure to introduce to you one of the 4 video presentations that Azets are doing to cover the 2022 budget. This one covers companies. That's my area of expertise for tax, and I will do what I can to impart what we heard during the budget and bring out salient points for you as a business. So I'm going to share screen with my slide deck, and we'll see how we get on with that. So bear with me a second. Okay, so the impact on companies. A bit of background, first of all. We didn't expect much from this budget, and in fairness, we didn't get much either. The Chancellor was massively constrained in terms of what he could do. He certainly had no leeway to give away anything substantive, and in truth, we didn't see that. But we did see a few things that are worthy of mention, and we also have some signs for what may happen in the future as well as we get to the back end of this year. Let's look at the following. We'll look at R&D tax credits very briefly. We'll cover some green incentives off, where there is still a gentle push towards going green. The cost of employment is probably the biggest one that was trailed beforehand. We will look at that in more detail, as well as capital expenditure, and then we will wrap up with what this means for companies. The first one is research and development relief. This started over 20 years ago, where the UK was way behind the OECD in terms of its investment into research and development as a proportion of our gross domestic product. We're still actually behind that curve, although we have caught up a bit, which is good to see. And tax reliefs are there to help incentivize businesses to do things that they ought to be doing, but don't necessarily do because of the economic uncertainty or of the risk associated with this. We have 2 types of relief. We have the SME relief, the small medium-sized enterprise relief, and we have the larger relief for large corporates, which is the R&D expenditure credit, or the RDEC. Both have been proven to have a marked impact on the efficiency of businesses and to the economy. The investment gives an excellent return, but the return, in fact, is greater on the RDEC regime compared to the SME regime. However, the tax relief on the SME scheme is greater. It's far bigger in terms of its impact on the business. So the government's looking at this for larger corporates. They're going through a consultation process to see how they can improve the larger RDEC relief, because that's the one identified as giving the greatest benefit to the economy. One change, though, and we won't see this until October, by the way, until the autumn, but one small change is that cloud data storage costs will now be wrapped into an R&D claim. It's reflective of what businesses do now. So that's now something that is added to qualifying expenditure for an R&D claim. Green incentives, we've already seen the reduction in VAT on energy saving materials, but that's increased. For example, insulation now has no VAT on it, but also the installation of wind turbines will have no VAT. Again, an incentive to invest in energy saving and energy reduction investment. We've got business rate relief on green energy generation and storage. So, for example, if you create a biomass boiler adjacent to your premises, then that will attract this business rate relief. And we also have 100% relief for low carbon heat networks, which is brought forward 1 year. It was due to start on 1 April 23. It's now 1 April 22. Employment costs, first the small one, which is a small increase in the employment allowance from £4,000 to £5,000. It reduces employers' NI bills by £1,000. Not a huge thing, but it's a nice to have, especially before we get to the main event, which is the one widely trailed in advance of the budget. That is the increase in national insurance costs for both employer and employee. And this was designed to help fund the NHS after a torrid time during the COVID pandemic. So we have 1.25% increases for both. And what this does is it takes the employer's rate from 13.8 to 15.05%, employees either 12 to 13.25 or 2 to 3.25%. With this for 1 year, we shall see. It may carry on, we do not know, but it does remain in place. More critically for businesses, yes, this is a cost, but the bigger cost is probably going to be the wage inflation that will dwarf this tax increase. Capital expenditure, a couple of things here. The annual investment allowance, which is where you get 100% relief on capital expenditure, was at £200,000, sorry, was £1 million, due to reduce to £200,000. That now remains at £1 million until 31 March 23. It will affect the more capital intensive businesses, but otherwise it's not really going to have an impact. £200,000 is more than enough for most companies to invest on an annual basis. We've got the VAT relief on energy saving materials. Again, that impacts on your CapEx. And an interesting point here is that we've seen no changes to the allowances for buying or leasing electric vehicles, nor indeed the benefit charges to employees. So it's related to CapEx rather than CapEx itself. But it's an important point because I want to bring that out as we look at the impact on companies. What does this all mean for companies? Well, the short answer is not a lot in the round because the Chancellor just had no room to manoeuvre, so there hasn't been that much change. But any business that is capital intensive, yes, they'll benefit from the increased annual investment allowances. The bigger change, and this is wrapped into a combination of employment costs and also the green incentive, is the enhancing of salary sacrifice structures. The first one, which is non-green, is giving up salary for something like a pension scheme, because that increased NI cost falls away. So there's a greater incentive to put in a salary sacrifice structure to divert your salary into something else. The biggest change, though, is for electric vehicles, because you have this push on the one side, which is employment cost. You then have the pull on the other side, which is the incentives for green anything, really, including electric vehicles. So what would happen there is that you've got the pressure on standard internal combustion engine costs, diesel, petrol shooting up a lot. Electric vehicles are not impacted to the same extent. So an example would be here, a company does a salary sacrifice for employees. They give up part of their salary, they get an electric vehicle which has been procured by or provided by the company, whether a lease or whether purchased. And the difference is quite marked for both employer and employee. For the employer, it's a 15% saving in employment cost because you've eliminated employers' national insurance, or near as eliminated it. For the employee, they're going from a 40 or 45% tax rate on that salary they're giving up and replacing it with a 2% benefit rate on an electric vehicle. So it really works well for both employer and employee, and of course it plays to the green agenda. Take that and extend that a bit, put solar panels on your premises, get the employees to charge up, and that really starts to create this virtuous circle. You're going green, but actually it makes a lot of economic sense as well. So a brief summary then, very little change just now. We expect more change in the autumn 22 budget, but for now, it's really papering over the cracks, or if you will, to use another metaphor, rearranging the deck chairs on the Titanic, but that's a little bit harsh perhaps. More incentives for going green. We'll see more of these as time goes on. And for a while, we do have higher employment costs that do need to be borne in mind. But other than that, the key message really is get on, do what you do best. And if you have any questions at all on this or anything else that has not been covered, then please do get in touch. Thank you for listening. Thank you for watching. Take care. Bye.